We most often forget that the fundamentals of real estate still apply when looking to scale your midterm rental portfolio. Now, our portfolio that we focus on is primarily on insurance. So, how we buy all of our homes are very strategic, and we keep in mind the silver tsunami. All right, what is it? What do I mean by that? Okay, cool. So, when we think about growing and scaling, there are multiple ways to grow and scale your real estate. We like the idea of ownership because we get the upside of equity, cash flow, tax advantages, etc. However, some have used the strategy, which is very well known, which is called co-hosting, very common in the a short-term rental industry, which can be utilized and, as a matter of fact, gives you an upper hand advantage when you understand the midterm rental model. When you pitch to your homeowners, whether you're co-hosting, for those of you who are not familiar with co-hosting, it means that you're reaching out to a homeowner who already has an established property, fully furnished, or maybe you're looking to have them furnish it respectably in a way that's going to finish very well. Not talking about the bare minimum furnishing. We're talking about short-term rental, Airbnb like furnishing. And then you reach out to them and you let them know that you actually have two strategies which most people do not know in the marketplace. You can do the short-term rental model, and you can do a hybrid, which means that you have direct relationships with these insurance companies. And if you're just getting started, you can say that you know exactly where to actually list your property and you just need permission. As part of this deal, you will be doing all the legwork of listing these properties in the right databases to get in front of who we call the relocation specialists and relocation agencies, who are looking to relocate families that are displaced due to unforeseen events, due to flooding, fires, etc. Right? So that's a nice pitch that you can add to your pitch deck when you're looking to land a contract on the midterm rental insurance. So when you're thinking about scaling, you can go the co-hosting realm. And if you're going the ownership realm, there is a way you can do this, right? We typically like to focus on single family homes, right? Now, I have a buddy of mine that actually bought a fourplex, who's close to a hospital, who's doing this, he's got ones and who's doing this midterm rental play. And he's also landed a few insurance contracts as well. Keep in mind, the midterm rental umbrella is a broad one. The midterm rental doesn't need to mean that you're in your insurance space, although we love to optimize for that first, because it is one of the most lucrative ways that your property can generate money, because these insurance companies are willing to pay a premium to relocate a family because there are less alternative options. But however, there's still other areas where you can dabble in the midterm rental. We had someone in our mastermind group literally get pilots that period. If you're currently getting value from watching this video, you'll want to make sure you take a second and click below to grab the midterm rental insurance blueprint to help accelerate your process in being able to land these midterm rental insurance contracts with respect to your marketplace. Make sure you click the button below and grab it, and continue on with the gems in this video. Come in a specific region. You could have the army. You could have travel nurses. You could, if you're close to a hospital. So remember, the fundamentals of real estate still apply. So keep the exit strategy top of mind when you're looking to make a decision on either co-hosting, managing, or purchasing a property. Our fundamentals: we like to be within 20 minute proximity to a metro city, because we want to be able to, if we don't have an MTR contract, be able to take in the people coming in for conferences, people coming in to visit, people coming in for even games, whether it's baseball games. The Metro Atlanta, there's different areas where the Braves play versus where the Atlanta Hawks play. You want to get people coming in for conferences, you want to get people coming in for attractions, you want to get people coming in for concerts. We want all of the above, because we want to increase our chances. So when we're thinking about scaling our portfolio, we're strategically also thinking about, where do we have most of our properties, and we've actually turned down deals where we don't necessarily want to buy the block, because when we're looking to relocate a family, we want to give them options with respect to the proximity of where they are looking to relocate, right? So I don't want to start competing where I have three options to offer them on the same block. I want to be able to say, When there's inquiries coming in from left, right, and center, I want to be able to say, well, this property might be best for this location, this one might be best for this, because most relocation companies are looking to displace families within a 5 mile radius. It might extend to 10 if they don't have an option. But for that reason, we're very strategic in how we invest, where we don't necessarily want to buy the block. And we want to buy maybe the city, maybe buy the state, but we do want them to be scattered. Now, the criteria that I go with goes back to the fundamentals of real estate: location, 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 location. While we do have some properties that are still out in the rural areas, it's not too far out. Now, keep that in mind, that the rural areas are still an opportunity that usually is a pain point for a lot of the relocation specialists and agencies, or even families looking to relocate, because there's not as many options. But keep in mind that there are many options because there's not as much volume out there. So yes, it is a big problem, but you also want to be able to catch as much volume as possible when it comes to increase in requests, and also make sure that the short-term rental numbers always add up. Anytime we're looking to scale, it's the same fundamentals. The short-term rental play must be in play. Can regulations change in the future? 100%. But when I'm going into it, I'm doing my due diligence to understand, do you have to get licenses in this market for short-term rentals? Okay, great. What is the process? Is there a waiting period? Is there a premium to get in? Are they looking to change it down the road? It might be good to be grandfathered in. I might use that as an advantage. These are all the questions I'm asking, because it does matter what the regulations are in that specific county or state or city. Whatever it is, you want to make sure you're very clear on that, because if you don't have the option to do a short-term rental on the exit, to me, that's a concern. Because while I can guarantee that I can optimize the property to the best of the ability to be able to get as many inquiries and much interest as possible, I myself cannot guarantee you that you will end a contract in a specific amount of time. So it's not a matter of if, though, it is a matter of when. However, I don't want that when to mean 3 months of goose eggs and no activity. That is not what we do. We want to be like the airline industries. Anytime a plane takes off, we want to have as many seats as possible. We should never have our home sit empty. That's why the airline industry has standby, and that's why we have hybrid, and we do short-term rentals in between our midterm rental stays. So that is the way we're looking to scale. Now, the type of properties that we buy, we like to solve big problems. Therefore, it's really important for us to at least have 4 to 5 bedroom homes. Sweet spot. We'd love to have six to 7 bedroom homes too. That's another super sweet. Well, that's something that we don't have in our portfolio yet, but that is, again, 4 to 5 bedrooms is a sweet spot. Why? Because when you're solving a larger problem, you get paid a premium. So get in where you fit in. That's part of what we do as well. And keep in mind, house hacking can still apply. I truly believe if you're watching this and you've been in either you're renting or you've been living in your property more than a year, keep in mind that there is no limit as to how many primary residents you can have at a time. So it's very important that you look at your clauses and keep in mind you can always call it primary house hack. It is not talked about enough. If you're like, hey, 4 or 5 bedroom home in my market is very expensive, well, what's stopping you from putting 3.5% down on an FHA loan, or 5% down primary residence, live in it for the year, even house hack it for the year, right? No one stops you from being able to rent your home on an Airbnb if it's a primary, right? And then a year after, or whatever your clause says, right? Because remember, they say you have to have the intention to live there, but it doesn't stop anyone from, again, changing properties if for whatever reason. But your lenders are going to want to have a reason why you're moving. Maybe you're starting a family, maybe you're deciding to upgrade and change your lifestyle, move down to a different town, change cities. There's no limit on that, right? So while the rule does state that you must live within a year, have a look at what your clauses say. Speak to your lender about it. Understand, right? Ours had that in many different properties that we bought, so we follow that rule. As soon as it's a year, we get into a new primary, right? Another way to hack your portfolio for those of you who are just starting out too is, if you're going to do that, there's power in having a remote job if doable, because there's never a question about your change of employment because you work remotely. That's another big hack not often talked about, right? If you do have that luxury to work remotely, don't let it go to waste, because it means you can start going from primary to primary, relocate to relocate every year. And that is one way that you can grow your portfolio, in addition to using like 10% down payment for vacation home loans. Again, there's a lot of different products out there that you can use. That's the DSCR loans, that's service coverage ratio loans, where essentially they run the numbers like an Airbnb. That's why you're going to want your numbers to work for Airbnb, because that's how they're going to lend to you. And then you can also do a combination of a hybrid that way. There's many different ways, but it goes back to location, and then the asset type that we like: 4 to 5 bedroom, master on main, garages, fenced in backyard, no carpet, washer and dryer on main, brick style homes we do like as well. It's a good finish. We stay away from stucco. We also want to make sure that keep in mind the silver tsunami, saving the best for last. There are a lot of people that are going to be above, the age, and you're not going to be able to go up and down the stairs. So we do like to buy a lot of bungalows. We do like to have extra additional accessible basements that do walk out to the ground level, right? Because this additional space, you might be paying for a 3-2, but you really do have a 5-2, right? And again, that's another way to house out. Another way that we buy duplexes strategically is about having 2 separate entrances, 2 separate kitchens, a door in the middle that you can open or close, and that's now a huge upsell. Down the road, you have multiple exits where you can turn it into a duplex, or you can have a 5-bedroom listing and then a 3-bedroom listing at the top, or upsell them from a 3-2 during the stay to, hey, you can upgrade and get the suite downstairs. We've done this time and time again. There are multiple ways to scale. Do not sleep on your options. Make sure you continue to educate yourself, because when you do have this model, you're giving yourself an extra level of comfort. And even when you do have your leases and you run your leases and it's time to get in London loan, if you're showing them MTR income, that's going to play in your favor, because that's going to really help your debt to income, right? With respect to how much debt service and how much coverage you're actually getting on these rentals. Like, I remember showing a lender what we were getting. They're like, wow, very impressive. And that really played in our favor for our numbers. So make sure you scale strategically. Always keep the end in mind. Have an exit strategy. Remember, it's all about serving a problem, a large one, so that we can get highly rewarded and compensated for doing so. If you got value from this video, make sure you check out this video, The Secret to Building Your Brand in the Midterm Rental Insurance Space.